Hello. So in this live stream, we will talk about an interesting topic. So it's about Bitcoin, which is making a lot of news of late. So as you know that Bitcoin's price is going up quite drastically. In the last few weeks, it has gone up from say 20,000 to 50,000 now. So over an increase of 100%, 200%, 300%, even more than that. So what we'll do is that we will explore Bitcoin's price movement using Python, and then we'll get to know a bit of interesting price movement of this financial asset, which is quite different, by the way, from the other financial assets in the market. This particular financial asset doesn't have an intrinsic value. Well, many might disagree with me, but Bitcoin doesn't have an intrinsic value, right? But it is volatile, quite volatile, more volatile in fact than probably many other financial assets such as stocks or bonds or other financial assets. So to do that, so we'll do what we'll do is that we'll first go to Yahoo Finance. It is source of our data. So if you go to Yahoo Finance, just type in Bitcoin, and you can go to Bitcoin's price, and as you see here, today's price is 52,000 US dollar, right? 52,000 to 90. So there is an increase of about 3,600 in just about 24 hours, right? So massive increase in the last few days, especially after Tesla bought in about 1.5 billion worth of Bitcoin, and after that we see a huge increase in the price of the Bitcoin. All right, so I'm sure you already know about the news, all the news items about Bitcoin, so I'm not going to spend more time on that. So what we'll do is that we will download the data set for Bitcoin, and in Yahoo Finance, if you see, you have data for 1 day, for 5 days, for 1 month. So if you change this duration, you will see a different plot, right? You also have long term data. For example, you can also get data for 5 years, right? So you will get to know a longer view of the price movement. So that's also possible, right? So if you just click on it, it will take to a much bigger plot where you can see actually the movement of the Bitcoin, and you can also change the duration. You can plot this for 1 month duration, for 3 months, for past 6 months, for past 1 year, 2 years, even 5 years. So what we'll do is that we'll download 5 years of data, 5 years of Bitcoin's data, and explore that using some sort of data science techniques, basic data analysis techniques. We'll use Python to explore the price movement. We'll also use some sort of a time series analysis to analyze some of the nuances of the price movement for Bitcoin. All right. So in order to download the data, right, you know it's pretty simple actually. If you go to you just go back and you have historical data there, you can download. For example, you go to historical data, and then it will give you an option to download. I have already downloaded. When you download, you get it in CSV format, and you can easily import that to your Python session. So I have already downloaded that. I have downloaded for 5 years of price data. So let me show you the data, right? But before going to the data, actually first we need to import the important libraries, the Python libraries needed to explore data. So OS is important to define your working library, and then you need pandas and numpy, the basic library, right? For Panda, you need to import data to do data manipulation, so on and so forth. And NumPy is numerical Python, so you need that in order to perform numerical calculations. And Matplotlib and Seaborn are the libraries which will help you to visualize your data, right? So these are some of the libraries that you will need in order to perform analysis on any data, and this is a time series data. So what do you mean by time series data is that we have price data or closing price of Bitcoin for the last 5 years. So it's a continuous data for the last 5 years, and so there is a very constant or very equal time difference between each price points. So hence we call it a time series data. It's a balanced time series data. So first we will define our working library. So how we do that? We use OS for that. So we first define a working directory where we have the data. So it's bitcoin.csv. You can just give any name, and using pandas read underscore csv, we will import that. I have already done that, but you can use this command to get the data. I am giving a name of Bitcoin, but you can give any other name you want to. All right. So so this is how you get it. So basically PD is nothing but pandas, right? So don't, so those of you who are not familiar with Python, it's actually, it's a short name for pandas, right? You can actually give any other name, but it's just that we call it PD, right? That's how we normally refer to panda. Okay, so PD dot read underscore CSV is something that we'll use to import the CSV file. So in order to run it, just control and enter, right? You can also run it from here, so that's also quite easy. And by the way, if you need this file, this Jupyter notebook, please let me know in the comment section. If you need this, I will just email over to you and let me know. All right. So now we have imported the data, and it's for 5 years, by the way, right? So that means it starts in February 17th of February 2016 to 17th of February 2021, right? So pretty long time, right? Especially for an asset like Bitcoin, which has not been there for a long time, right? It's just been there for little over a decade. All right. So how does the data look like? So we will use the Bitcoin dot head. So let me show you how it looks like. So we have date. So the first column, and then we have open price for a given day, and then high price, the highest price in that particular day, the lowest price in that particular day, and the closing price. When the market closes, what is the price, right? And then you have the adjusted closing. Okay, it's just some sort of adjustment that is done to the close price, which is very close to the close price, right? And what we are interested in is the close price, actually, close price and the open price, right? Through these two columns, we will know actually the return, right? And then you also have volume data, right? That's also very important, right? The volume has changed quite drastically, as we have seen in the recent past, right? Now these are some of the data points. As you can see, we have one data point from 2017, one data from 2018, one from 2019, one from 20, one from 20. Sorry, no, that's actually all from 2016. I'm sorry. So that's all from 2016. It's just from the same year. So if you use this dot head, it will just give you the top 4-5 observations. But if you want to see the data set, what you need to do is that it's pretty simple. Just type in Bitcoin, because that's the name of the data set, and just run it, right? Control and enter, press enter, and you will get. But the problem is that you have too many data points here, over 1800 rows, so it can't print all these rows, so you won't be able to see that. But here is the snapshot of the data, right? There are 1828 rows in this data set, right. So, that many rows we have. Okay. So, we will do some basic analysis on this, and the first thing that we will do is that we will do some sort of exploration. We will get the summary statistics of this data. So, we will try to get it for all the columns, right. It is possible, but you can also do that for just one of the column, right, the column of interest or the variable of interest, right. But we will do that for all, and if you do it for all, the syntax is simple, bitcoin.describe, right. So, it will do it for all columns in the Bitcoin data set. Okay. But if you want to just find out the summary statistic for just one of the column, for example, close, what you need to do is just simple, just square bracket, and then let us use this one. Okay. Let us hope the syntax is correct. Yes, it is, right. So, now here we see for closing price, how many number of observations we have 1822. What is the mean? The mean closing price is 7,000, right. Isn't it quite strange that now we are at 50,000, but the mean Bitcoin's price in the last 5 years is just 7,000, right. So, it is so skewed in that sense. And as I told you that it is a very volatile asset. And how do you know the volatility of a given asset? You know the volatility of a given asset through standard deviation or the variance, and you see it is a huge variance, right. It is like variance of close to 7,000, right. That is a huge variance. It is very volatile or very risky asset. In the term of risk management or in finance, we call it very risky asset, because it is quite volatile. Standard deviation is quite high or the variance is quite high. Interestingly, the minimum closing price is just 400. That means 5 years back, Bitcoin's price was just 400 US dollar, and now 50,000, right. You wouldn't have, nobody would have imagined that Bitcoin will be priced at 50,000 in just about 5 years, but that has happened, right. And you see the quantile distribution. So, 25th quantile is just 1800. So, that means not much. 50th is close to 7,000. So, that is basically close to mean, and 75th is about 9,000. So, imagine the skewness in this particular data, and the skewness is coming from the fact that in the last 4-5 months we see that Bitcoin's price has moved from 8,000 US dollar to 52,000 right now, right. Is hugely skewed, and hence you see the very uneven distribution of this particular data set or particular time series, right. And in order to get for all the data, just remove this one, and you can easily get that. Okay. But I am also interested in the volume. Let me check how does the volume look like. Okay. Okay. As expected, it is going up quite drastically, right, quite heavily, but okay, nothing much interesting on this. I was hoping something different, but that is not the case. Anyway, so if you want to find the summary statistics for all the columns in this data set, do not use any name here, just keep it without any name, and you will get it for all the columns. All right. Now we have the price, and what is important in finance or investment is also the return, right. The return is very important. And how do you find the return? Well, return is just percentage change, right. And the way we calculate return here is that the percentage change in the adjusted close price for both Bitcoin. So, here is the syntax. So, I am creating a new column in Bitcoin in this data set, and what I am doing is that, so I am taking the adjusted close price and using this this particular method PCT underscore change, which is a percentage change. Okay. Now, if you use this, it will create a new column called return, which will be saved in this data set Bitcoin, and just a percentage change. Okay. So, it is as simple as that, and if you run this, you will get a new column, right. This column return was not there actually in the data set that we downloaded from Yahoo Finance, but now we have created this data set, and you can find that in the data frame. Okay. Now, we will just see, and here you see that we have returned this new column to the extreme right. For the first row, you will always get it none or not available, because the previous this data is not available. So, it will not be able to calculate that, but from the next row you will get it, right. Sometime you will get a positive return and negative return. So, price of a given asset can never be negative, but the return can always be negative, right. It can be negative or positive, right, because it is just a difference, right, and the difference in the prices between two consecutive days could be negative or a positive, right. So, it is a fundamental of finance where the price can never be negative, but return is can go both way, and hence it is so important to analyze time series data or financial time series data on the return series, not just on the price series. All right. What is so interesting is that to know what is the average return, average daily return of Bitcoin over the last 5 years, and I have done that. So, I am just using a mean function here, and let me tell you that the average mean return is less than 1%, right. That is quite interesting, that the average daily return is less than 1%, yet the price has moved from 400 5 years back to now 52,000. That is interesting, but that is not the way how you actually analyze return, right. You simply should not take the average of the daily return. That is not a proper indicator. If you really want to see the interest, so the return, the actual return, then just take the starting price 5 years back and the end price right now, and see the difference, and that will be some thousands of percentage of increase, right. And that is the proper or the correct way of measuring the return, but not like taking the average of daily return. That obviously is it's very less here. Okay. And then we will plot the closing price. Okay, how does it look like? Now, in Yahoo Finance also you can get the plot, but here if you use Python, you write your own script, you can keep on playing around with it, right. You can do it separately for different years. You can have a line plot or dot plot. You can plot that for adjusted close price or for close price or the mean of the price. You can do a moving average of the price stock of the price of the asset. So, there are a lot of things that you can do if you actually do it yourself, instead of just looking at what you get in Yahoo Finance or in other websites. And using Python, there are lots of good libraries. Seaborn and Matplotlib were two very good libraries used for visualization, and that is what we are going to use. So, I am using this adjusted close price, and then using plot functions to plot. It is just a simple plot, right. It is a simple time series plot for the 5 years. It was somewhere close to 400, now it is over 52,000, right. If I so in 2016-17 it went up to 20,000, then it crashed. It remained low for a very long time until the pandemic, and during the first 4-5 months of pandemic, it increased from 8,000 to about 18,000, and I think around September the price increased to about 40,000, and then after a couple of days it crashed again to 25,000, and here you see the crash, right. You look at my cursor, I am just pointing the cursor here, and here you see that it crashed during that time for a couple of days. And then what happened that Elon Musk and Tesla, they announced that they would buy 1.5 billion. In fact, they bought first and then announced. So it's perhaps for the first time such a big company, a mainstream company, bought such a invested or bought Bitcoin, and that's really triggered the increase in the price again, and it increased to close to 50,000, well 45,000 initially, but in the last few months I think other large companies are also showing interest, and hence it is now well over 52,000. So more and more people buying now, so the demand is going up, and hence the price is also going up, and it is currently about 40,000. If you go to Yahoo Finance, right, every few minutes it is changing, right. A while back it was 52,300, now it's 50,100 something. So it's so volatile, right. Interesting time for Bitcoin, not just for Bitcoin, but for also for other crypto currencies as well. All right, but how does the return look like? Well, we are plotting the return again, right. So as I told you that return is an interesting series in time series, in financial time series, because it has both ways, right. It can move both ways, positive, it can be positive return or negative return, and here you see many times you see a huge increase in just about few days, but also a huge drop. So there were huge drops and huge increase for in a balanced way for at least for the first 4 years, and there is a huge drop all of a sudden, right. If you see the cursor here, I think this is about 2017 or 18, and then the trend remained for it continues to be quite volatile. It's always, the bottom line here is that this asset is very volatile, right. So, and volatility means more risk. So you could lose money in long term, but you could also make money. So it could give high return, but it could also give high losses in the future. So that's all about volatility. Bit about change in the style. So that was I'm having a dotted plot. So in order to plot like this, you just have to change the style. So it was the dash, but now it was cape dot. That means you will get a dotted plot for the return. Okay. So depending on what you want, you can, if you are doing bit of a research, you are doing academic research on this, then I think you can explore these different types of plots and what really suits you for your thesis and all. Okay. All right. So now we'll explore some other plots as well. For example, histogram. So histogram is something that is used to know the distribution of the variable. And here you see the distribution of return variable, right. It looks more like normal, it's like log normal distribution, and for financial returns we always expect the return to be log normally distributed, which is just a logarithm of the normal distribution, right. It's a bit of a narrow bell shaped curve, and that's what you see here, right, but it's evenly distributed, right. I mean, you have, it's not very skewed. That means the daily changes in the Bitcoin price is quite evenly distributed. You have negative returns, you also have positive returns, right. So in both sides it's uniformly distributed, it seems like that, right. If you smoothen it, right, if you have a kernel density plot, then you can visualize it better, and we'll have a kernel density plot later in this video. All right. So we have also done that for closing, adjusted closing price, which the adjusted closing price is actually quite skewed, right. For large part of in the last 5 years, the price was between 400 to less than 10,000, right, and this is this huge, like most of the times it was within 10,000. For some time it was between 10,000 to 20, but only for a very brief period it has gone beyond 20,000, right, and that's why you see only a shorter bars, right, for after 20,000, but very large bars before less than 10,000, right? And that's like most part of the periods in the last 5 years, and we have taken 5 years of data, so that's why I'm giving that reference here. Kernel density is just a smoothing form of histogram, so it's a better way of visualizing distribution of data. So right, so here what you do is that it's just a plot, same function, just that kind equal to KDE. If you use KDE, it will give you kernel density estimation. Okay, so it's a non-parametric way of fitting data. So if you want to know more about kernel density estimation, you can watch some of the videos in my channel. So but it's nothing but just a smoother way of visualizing the data. Histogram is pretty similar to kernel density, so think in that way. Okay, so here you see for the adjusted close price is quite skewed, right? It's skewed towards skewed towards 0. So it's like right orthotic in technical terms. In statistical term, you can call it right orthotic. Whereas the return is quite log normal, right? It's quite bell shaped, but say thin bell shaped curve. And here you see here, right? So we have also done this KDE or kernel density plot for return series, and you see a difference here, right? It's much smoother also, right? It's quite balanced in both sides and so on forth. So that's one good thing about doing a research on Bitcoin's price movement, is that it's better to take return, daily return, than the price, because return gives you some sort of better pattern than price movements, right? And then what we'll do is that we'll do a bit of a very elementary level of time series forecasting, but not we won't be using any sophisticated methods. We'll simply be using some exponential smoothing, which is very elementary or very basic time series forecasting. So exponential smoothing is about, it will take some historical data points from the same time series and provide more weights to the recent data from the recent periods, and less weightage to the data from the farther periods, right? And it will smooth it and forecast. So that's basically it. And there are many ways of doing it. Hall to enter is one way. So in Python you have stats model, and in stats model you have time series analysis, and from time series analysis we import Hall to enter, and we import simple exponential smoothing. Okay, and we use adjusted close price to fit a line, right? And you have smoothing parameters and like some of the things that you have the options. You can explore more about it. I have used some very default thresholds, but you can change the threshold and play around with it. And then I have used the color coding just to see, right? There's actual data and the predicted data. Now the actual data is the red and the predicted is the blue, right? The fitted one, right? It's fitting the maybe. Now if you see, the exponential smoothing is actually fitting very well the historical data until last September. So until then there was some level of pattern in the data which you could fit maybe using some sort of analysis, but after that you can't really fit, you can't really predict this jump in the last 3 months from 15,000 to now 52,000. So that's almost never possible, and no time series, no quantitative analysis will be able to predict that kind of a price movement. Hence it's so important to really not to give much importance to people who actually claim that they can perfectly predict the price movement in the future using quantitative, very sophisticated techniques. That's not always true, and it's not always supported by the theoretical analysis or the theoretical time series analysis. That's not all. There's hardly any pattern, frankly speaking, in the last. If you go through this data, it's quite random, right? And we can prove that also, right? There are some plots we can do. For example, lag plots is used to check if the series is random or not. And from pandas we can import lag plot to plot a lag plot. by the way, in the last graph, let me tell you one thing. You can also extrapolate these predictions to the future, right? So I haven't done that, but you can also do that for future, if in case you are interested to do forecasting and all. But you can also use other sophisticated forecasting like LSTM and that kind of thing, more from the machine learning side. All right. So the lag plot actually, if the plots lie in the straight line, then there is some pattern. But here you see there are the points are not always on straight line, right? They are on somewhat deviated from the straight line. So you see that the fact that there is a pattern in this data for forecasting is challenged here. And then we will plot the autocorrelation plot. Autocorrelation is about correlation with the lags, right? So if you are familiar with the time series analysis, autocorrelation or checking for autocorrelation is one important aspect of time series analysis, and you can do that by importing autocorrelation underscore plot. And we see that just we'll check autocorrelation plot for adjusted closing price. And what you get is that if you have a if the plot or the autocorrelation plot or SCF, autocorrelation function, autocorrelation plot is outside of this this boundary, then you have some pattern. But it seems that the plot is within this boundary. That means there is hardly any pattern. So you can't let us say build an ARIMA kind of a model to predict prices for this kind of a time series. Okay, so that basically proves that there is hardly any pattern in this data, which it's quite random. It's heavily moving because of sentiments, because of tweets, because of reasons outside of any proper macroeconomic analysis. So that's something you simply cannot do that, and many economists are also unable to do that kind of research on that, because they think it's quite it's the herd mentality of people that is moving the price, right? It's making it volatile. There's no underlying reason behind it. It's not like doing an analysis on stock price movement or stock index movement. It's a lot more random and quite right. So you can't use finance theories to analyze such a financial asset. So these are some of the things. If you need the Jupyter notebook, please let me know. I will send it to you. Just write me an email and I will send it to you. All right. So that's it for today. If in case you have questions also, you can ask me in the comment section and I will try to answer. So that's all for today, and I will see you in another live session. Thanks and good night, good afternoon. People in the US, good afternoon, and people in Europe, good night. Thanks for tuning in. Thanks. See you next time. Bye.